Question 4. Question 5. When preparing the financial statements on the 31st of October, show the amount that would be reflected for bank on the balance sheet of Thorn Traders. Also provide a reason as to why the bookkeeper would need to make this balance sheet adjustment. Okay, forget what we done because we are done with the stale check. Everything that has to do with number 3 was where we work out the amount according to the bank account without the stale check. Now they ask you in the financial statements. Okay. And the moment that they ask you financial statements at the end of October, I want you to concentrate on the post-dated check. Okay, there's a post-dated check. The number of the check is 2917 and the amount is 5,200 Rand. And I want you to concentrate and listen to this. Okay, what are you going to do with this? They ask you the bank. What is the amount that's going to be on the bank? And I'm going to ask you, is this money already paid out? No, it's not. So we cannot say that the bank balance will be 20970 in an overdraft at the end of the year in the financial statements because that amount was not paid out. So what you're going to do, you take your bank account or your bank balance and you basically say minus 20970 and you add back the 5,200 Rand. So that means that your minus 20970 because it was in an overdraft, and that means that the 5,200 was not paid out yet. And there's your bank balance. And also on the other hand, you must show, okay, they're not going to tell you. If they don't tell you for what was that check, and I'm sure that they're not going to tell you, you say, okay, for creditors control. We also must add back 5,200 Rand because we didn't pay that amount yet. Okay, please understand and listen. There's a post-dated check on the bank reconciliation statement for 5,200 Rand, and the question is, did we already paid out that amount? No. So that means that this bank overdraft that you saw there is smaller because of the 5,200 Rand that's not paid out yet. So you add it back to your bank account. If your bank account is positive, then it's going to make the positive balance more. But now the bank is in an overdraft, so it makes the overdraft balance. Sorry, this is supposed to be overdraft. So it makes the overdraft balance a little bit smaller, and you also add it back to your creditors control. Also provide a reason as to why the bookkeeper would need to make this balance sheet adjustment, and the only reason is because this money is not paid out yet. It is post-dated. There's only one question left. We are still busy with this, and the question that's left is the internal auditor. Okay, let's read it there. The internal auditor noticed that the deposit of 12930, which appeared on the draft bank reconciliation statement, is reflected on the November bank statement that we received from our bank. Our bank is Mega Bank, only as 2930. Okay, so the bank, there's a deposit of 12930 on the bank, on the bank reconciliation statement, but the bank, there's only 2930 on the bank. Of the investigation, okay, what is the question that you ask yourself? Which one is correct? And 98% of the time the bank statement is correct. And it was like there's an error that you did in your CRJ or your CPJ. So most of the time the problem is in the books of the business. But after the investigation, it is found that Mega Bank has recorded this correctly. Can you see that? Because the bank will not make an error just because of, so it was correctly on the bank statement, but the error was made in the books of Thorn Traders. So we made the mistake. In our books, the mistake was made. So what is the problem now? The 12930 in the CRJ, that was on the credit side of the bank reconciliation statement, is wrong. Explain why the internal auditor should be concerned about the 10,000 Rand difference. Because this is a major amount, and it didn't need to be 10,000 Rand. Any amount, any difference between the journals, cash journals, and the bank statement is major. Why is it major? Because there's an error. Because there's maybe some fraud. There's things that's not kosher. Everything is not 100% correct, and it must be 100% correct because we work with money. There's a lack of control. And that brings us back to the first question of this exercise. The first question was, explain why it is important for a business to prepare a bank reconciliation statement on a monthly basis. Why? For control purposes. So now we did the bank recon. We saw that there's 10,000 Rand wrong. There's a difference of 10,000 Rand. And now you must explain why the internal auditor should be concerned, because everything is not 100% correct and there's a lack of control. What action should the internal auditor take with regard to this difference? Provide 3 different points in your answer. I'm going to show you the answer. It's very, very small. Let's see if we can see a little bit. Where are you? What action should the internal auditor take? Check from the receipts to the deposit slip to identify the cash collection was all deposited. So you go to the receipts and then you check the deposit slip to see if all the cash was deposited. That's one of the things that you can do. Check if there is any error on the deposit slip. Check if there is any error on the deposit slip. Investigate if the cash has been stolen. Interview the cashier or the bookkeeper. Screen all employees for trustworthiness. Because there's 10,000 Rand in this CRJ, it can be a normal mistake. It's not necessary to be fraud or theft or something like that. It can be only an error, but you must make sure why is there an error. Establish proper internal control procedures, and there, what is this? What is this division of duties? One person must not do everything. One person must not work with everything according to the money and the recording of the money and the receiving of the stock, etc., etc. So that one person's work serves as a check on another. That is the division of duty. One person's work, we've got person A and person B. So the work of person A serves as a check for person B. And the work of person B serves as a check for person C. And owner to do the banking himself. There's a few things that you can do. They ask you, the internal auditor, what can he do according to the difference of 10,000 rand, or according to prevent something of this to happen in the future. Check the receipts, check the deposit slip, see, because this 10,000 rand, if it's on the deposit slip, where is it now? Okay, but remember, the bank statement was correct, so there's only an error there. Check if there's an error on the deposit slip. Investigate if the cash has been stolen. But it wasn't, because in this case, the bank statement was correct. What if our books was correct and the bank statement was wrong? Then you can say, okay, maybe the cash was stolen. But you cannot say the cash was stolen if the amount on the bank statement, which is the smaller amount, is correct. But if you've got that problem, interview the bookkeeper. Make sure that there's proper internal control purposes, division of duties, and you can also say that the owner can do the banking himself. This is all for today. Grade 12, thank you very much. I want you to go through this again, or if you're busy with bank recon in your school, please concentrate, make sure that you understand what they ask you. And this was only 2 activities, except for the one that I did, the bank recon, 2 activities to show you what is the analysis and interpretation of bank reconciliation. Thank you very much, and I hope you've got a good week until we see you again. Bye-bye.